The market performance. So mixed week means more of a like consolidation after 3 weeks of advance. The tone was more of sideways, but in the last two trading session, it was a strong directional move. Means on Thursday we saw that index inched higher, inched closer to 24,800 mark when it comes to the Nifty index, but eventually we have settled around 24,500. So whatever we have gained on Thursday, we have surrendered on Friday. That's why we are seeing muted close for both Nifty and Sensex. As you can see, and we've discussed also last week, that FMCG and IT could be among the performers in continuation to the last week trend. So that turned out to be true because both FMCG and IT were the one which could end in green. The rest of the sectors, be it media, metal, energy, pharma, and auto, they've all settled in the red. Talking about gainers, SBI Life from the life insurance basket, a new high and strong, buying interest for SBI Life, followed by Infosys. Again, for this also, the IT index, the IT majors, especially TCS and Infosys, they managed to make a new high, record high during the week. Then we have ONGC also from the energy basket, which did well with nearly 4.5% kind of gains, and from the FMCG major HUL. And lastly on the list, SBI, when the other banking majors were sitting on the sidelines, SBI could manage to post a decent show. Now, talking about gainers, out of 5 losers, top 3 names, as you can see on the list, are from the metal pack: Tata Steel, JSW Steel, and Hindalco, followed by NTPC and Grasim as well. So this is the brief of what we saw during the week. Means more of a lackluster or week of consolidation. Though the tone was positive for most part of the week, it was Friday, means that is today, wherein we saw some profit taking, and it's normal, especially ahead of event like we have Tuesday Union Bank budget scheduled. Prior to that, over the weekend, we have Reliance and SDFC numbers also scheduled. So it's going to be a critical week next week. And needless to say that apart from the index, the major challenge is the mid cap and small cap, and some of the themes which were doing exceptionally well, like defense, railways, they were also under tremendous pressure. In fact, the mid cap and small cap, they were the one basically which felt the maximum heat. And in today's session also, means on Friday itself, it lost over 2%. So all in all, a week of profit taking or consolidation for the index, but the major pressure was more in the broader indices. Now, what we are anticipating. So this is the daily chart of Nifty 50 index, and this I was referring to that a very muted initial session, the first 2 sessions, followed by the next 2, wherein on Thursday we had this big green candle, and Friday we have completely engulfed that move. So what this indicates is that bulls which were under control, they lost some of its ground, especially after this cut. And since it's a decisive candle, means it's not a very decisive candle or a small candle. So this indicates a possibility of further consolidation or correction. So uptick means outrightly negating this candle is going to be difficult for market. In short, to reclaim 24,800, 850 zone is going to be difficult for the market in the next couple of sessions. So either it might go down or remain in a range. We have marginal support at 24,450, which is around 70-80 points away. But the major is this yellow line, as you can see on the screen, the 20 EMA, which comes around 24,150 area. So around this zone, especially before the union budget, this is the critical area which Nifty should defend. if markets correct further. And if it breaks, then 23,700 could also be the possibility. But as of now, we are anticipating that this level, it should hold even if it corrects during the week. So roughly around 400 points from the current level is what the indication that Nifty might drift further in days to come. To negate this, sideways negative bias, as we discussed earlier, that 24,800, 850, we need a close above the same, or some sign of reversal, a pattern of formation which indicates reversal. We need that. So as of now, bias is slightly on the negative side based on the Friday's close. Let's talk about banking then. So banking, there was hardly any change. Means we were here last week around this area. And this week also we've spent in a very tight range, 5,200, 5,800 is the zone that we were hovering in. Again, for this also, this yellow line, which is around 52,000 mark, that's the make or break area. Today also, when the markets were witnessing pressure, SBI and ICICI, they were holding strong. Earlier last week, it was Axis which was making an attempt. HDFC, we have numbers. Obviously, we're going to see the reaction on Monday, how the banking majors along with SDFC react to those numbers. So 52,000 is something which is the make or break for banking index. So if it breaks 52 and closes below the same, then it's time that one should reduce position long exposure before the event, if it happens on Monday. And if that's the case, that if we see the pressure coming on Tuesday or maybe some other day, then also one should be cautious. And until we break 52,800 decisively, 800, 850, the tone is likely to remain sideways to negative. So for banking also, we feel that one should refrain. Last week also we've talked about not to go ahead and look for aggressive long in the banking. So that view remains the same, because till last week we were at least constructive about Nifty, thanks to the buoyancy that we were eyeing in IT and FMCG. So that has unfolded now. Means the IT index has also made a new high. FMCG has also made a new high, and we were close to that mark, a new milestone of 25,000 level also, after the initial uptick in today's session. So it's healthy if we see some consolidation in the market right now. But the major challenging part is during this consolidation, this time-wise correction, price-wise correction, and especially during the earnings, the mid-cap, small-cap, or sectors, themes which are overstretched, they usually react sharply on the negative side if something goes wrong. Means if the earning announcements are not in sync with the price. So for that reason, it's prudent that one should refrain from aggressive long when it comes to this mid-cap and small-cap space and sectors and themes which were we were seeing strong traction earlier. So it's time now to focus more on index majors and that too low beta counters until this events unfold and we have clarity from the earning front as well. Now let's talk about stocks wherein we see some potential of up move or down move. So the first that we have on the list is Bajaj Finserv. So it's a weekly graph of Bajaj Finserv, and as you can see, it's been almost 2 years, more than 2 years now, that the stock has been hovering in a range. We have discussed about this stock earlier also, maybe around here. So initially it made an attempt of recovery and inched toward the upper trend line. but it couldn't surpass. And again, it drifted towards the support zone of the medium term moving average, that is the 100 days of weekly exponential moving average, and again formed a base. And again, we are seeing an attempt of recovery. So, in a market like this, wherein we are seeing excessive volatility and some of these stocks, they are already overbought, in line with the index. So, the focus should be more on sectors and stocks or themes wherein we have uh, reasonable risk to reward ratio. So we feel Bajaj Finserv fall in that category because we have strong base formation around 1550, 1500 area, where we have multiple supports to look at. One is this, trend line. Other is this 100 days of exponential moving average on the weekly chart. So this gives us comfort that in case if there will be any profit taking in the market, the downside is going to be capped, and gradually and eventually it might make an attempt to surpass this hurdle. So it's time basically that as we are seeing that earlier the range was very broad and it's getting narrower with every passing week. So eventually we may see this stock making an attempt to cross this mark of 1700 1730 area and resume its overall uptrend. So Bajaj Finserv is one candidate which one can look at for accumulation during the week, and in fact for the coming week as well. Next, Infosys. So last week we talked about TCS, done exceptionally well, in line with the the Nifty IT index. We are seeing this buoyancy, in the top two names like Infosys, TCS. They are also making a new high. So after this consolidation range break and a new high, we feel that there could be a bit of consolidation in the stock in line with the market. If the market corrects further and if we see some profit taking also after this strong up move and a new high in the index as well as stock, but the tone and the trend is likely to remain positive for IT. So we have talked about other sectors like auto. When this rally started, auto was the first sector that which started moving and done exceptionally well, followed by the others. It's only IT which was left behind, which has weight in the index and uh, which underperformed for long period, for roughly around 1.5 years, 2 years. So after this break, we feel that for the next leg of the up move, after some consolidation or correction, alongside with the others, it's not that the others are going to sit on sidelines completely. Selective participation is something which is expected on a rotational basis across sector, but IT by and large is likely to help the index to maintain the positive tone or inch toward 25,000 mark or maybe higher. So among the IT majors, Infosys also is something that one can look to accumulate. If we see any correction, this 1700 should act as a support now, which was earlier acting as a resistance, and upside around 1850, 1860, which is the upper band, and which also coincides with the previous high as well. So this is the range basically that one can look for accumulation with a medium to long term. Now, last that we have on the list, as we have started seeing some profit taking also. Certain stocks, from the F&O basket, wherein we hardly saw any change in the trend. There were phases of recovery or rebound, but the trend remained the same, downside for medium to long term. The PVR earnings also falls in the same category, that post this distribution pattern breakdown. It made multiple attempts of recovery, but couldn't surpass the resistance zone of first the trend line and then this multiple moving averages on the weekly chart. And this again, a big red candle, the way we have closed on this week. So that might result in further profit taking in days to come. Apart from Inox, PVR Inox, we have stocks like Bandhan Bank, wherein we have consistent downtrend. We have RBL also, which made an attempt but couldn't sustain. We have UPL from the Nifty 50 basket, wherein the trend is down. So these are some of the names wherein, including Z, wherein we see some recovery, but the underperformance continues. So as and when the market gives you the opportunity to go short, the preference should be given to these names. So it's not that the other sectors are not going to witness profit taking. In fact, metal were the one which badly hit in today's session, and it might continue to witness further decline in days to come as well. But the challenging part is that if you are shorting something which is strong and just witnessing some profit taking, maintaining stop losses becomes difficult. But when you know that the trend is down on weekly, monthly, on the bigger time frames, then at least we have this comfort that if market is going to correct, they might resume the overall trend and underperform the other counters whenever the market corrects, and can yield better returns. So in short, we've discussed about both Nifty and banking. Trading with the negative bias initially is what the indications are. It's an important event basically, so we need to see how this event unfolds. But as of now, the indications are in the favor that we could see some profit taking, because we have almost tested the new milestone of 25,000 mark. We were just 150 points away from that area, and the sector rotation which we were seeing earlier, that has also paused a bit. Means IT and FMCG, they were the only one which could manage to do well. Rest was sitting on the sidelines and witnessing profit taking. So it's not only the union budget, it's also the earnings. So both these factors put together are going to dictate the market trend. But more importantly, what we've discussed is that to prefer index majors, they are less volatile during corrective phase, and they are easily managed, especially like through option positions, option strategies. You can hedge your positions. If you have most of the FNO stocks or the Nifty 50 basket stocks, you can hedge it through Nifty option spreads, put spreads, or even the naked puts, depending on risk appetite. But when it comes to mid cap and small cap, it becomes very difficult. Now, on the stock specific front, for stock to accumulate, we've talked about Bajaj Finserv and Infosys, which look good to us, and PVR if you get the shorting opportunity. So this is all from the presentation part. We'll share a quick feedback poll, and then we can start with the Q&A session. So please rate your experience, and then we can start with the Q&A session. If you have any question, you can just use that Q&A button and your questions. Filling your feedback, and please use that Q&A button instead of raise hand if you have any question. Gleam Korji, please use that Q&A button instead of raise hand. Okay. So let's start with Q&A now. Okay, so first question from Mr. Rahul, that our view on mid-cap IT. So mid-cap IT, in fact, in today's trade, yes, we were seeing underperformance from the mid-cap IT names, especially Birlasoft, I can't recall the other names like Persistent, how they were performing, Emphasis and Persistent, Techem. So they were like largely mixed, but some of these counters were slightly on the back foot. It's a normal profit taking, and especially when the mid cap and small cap are under pressure. So that eventually engulf the others also, including the IT, which were performing well largely. So that could be the reason why we were seeing, dip in the mid cap IT, though the sector looks upbeat to us. So for a time being now, as we've discussed, the preference should be given to the large cap ID names. Apart from the select names in the mid cap ID space, the challenge is that they are highly volatile. In line with what we see in the other mid cap counters. So especially before the earning announcement is something that one should be cautious of. Okay, next. There were some stock specific queries. So I request, we can restrict our questions to sectors so that we can, it benefits the larger audience. And, it should be in sync with what we have discussed so that we can plan our strategy for the next week. If we are going to talk about individual stock, it's not going to help you to, plan your strategy for the next week. The reason behind doing this webinar is to prepare or, uh, plan wherein which sectors to choose from. So if you have any queries around that, which sectors to avoid, the key areas we have already discussed for the index. So that is something that we plan. And then depending upon your risk appetite, obviously you choose stocks for both long and short. So, okay, next on the sectoral front, we have Suhashin Pal on chemical sector. So, what is our view? Only this sector has not participated in the rally. So, it's not completely correct. In fact, we have seen decent recovery in the chemical names also, especially Deepak Nitrate. In fact, the UPL, which was the underperformer we discussed, also rebounded very strongly. Then we have Navin Fluorine, PI Industries, SRF. Yes, the quantum was less in comparison to what we are seeing in the other sectors, but there was marginal participation. We feel that this trend might continue and the situation could improve or deteriorate based on the earning announcements. So for a time being now, I feel that the stock within the sector which are outperforming, just like Deepak Nitrate, which is doing well, one should prefer those names, instead of the laggards. And yes, they can correct further in line with the index. It's just that the quantum could be less in the performers in comparison to the laggards. So if you choose the right stock even during the market correction, the chances of outperformance remains high. But at the same time, when the markets, overall corrects, then obviously that we see 90% of the stock trading in sync with the benchmark. So if it's a trading position, obviously one should not hesitate taking a stop and exiting the position, especially before the event. And if it's a investment, then one should not worry about. Again, we have certain questions around stocks, so I'll just answer the sectoral view. I hope that it answers your query that auto as a space from last at least 5-8 weeks are showing some sign of fatigue or exhaustion. In fact, the top names, M&M, it started with M&M. Then we have started seeing similar kind of a trend in Bajaj Auto, Hero Motoco, which were doing well as of now. But now we have started seeing some, correction. Maruti is the only exception I feel, or TVS, or Eicher. The rest of the name majority they are facing some burn now. So auto should be on your avoid list for a time being until we see some sign of reversal. In fact, uh, as a disclosure and disclaimer, we have recommended to go short in Hero Motoco in today's trade through options to our clients. So we are biased, and the formation basically indicates there's more pain in auto space ahead. So for a time being now, obviously, as the earnings are going to unfold, that might change the view because we are seeing this overbought trend continuing in the other sectors also. So that might resume for auto as well. But as of now, our view is on the bearish side for majority of the auto names. Cement, the cement again, it's a mixed bag because India Cement was among the top performer during the week. But at the same time, we are seeing Ramco, struggling, uh, and it's trading, if I'm not wrong, around 52-week low. So I feel that the top names, again, the stock selection becomes critical. So Ultratech, India Cement, uh, especially if the view is short term, uh, one should prefer. And then we have select name like Dalmia also, which after this recent uptick has retraced marginally, and it might witness some consolidation, but the tone looks comparatively okay. The rest of the name is something that one should refrain. In fact, ACC Ambuja, we are seeing the fresh shine of distribution in some of these names. So for a time being now, Ultratech and India Cement is something that I feel have potential to do well in comparison to the others. Like the overall sector is really under pressure, the metal pack, and we feel that for a time being now, despite the positive global clues, so China is basically a missing link so far. The US markets were doing well, and usually we follow clues from the Chinese market when it comes to the uh, performance of the metal counters. In between, we see other events, unfold, be it QIP or any other event. But the major impact we see on metal counters is based on the demand and supply, and plus during the earning, obviously the result announcement. So focus more on clues from the global market. As of now, indications are similar to what we are seeing in the auto pack. Means there, especially in JSW Steel, there was sharp cut before the numbers, so it's not a good sign. And we were seeing a similar kind of a trend in the other. So, during the week itself, we saw that out of five name from the Nifty 50 losers, three were from the metal stocks. So that clearly explains that one should refrain from, short-term trading bets in any of the metal counters, and let this market stabilize, let this sector stabilize a bit. We post the numbers, we'll get some clarity. Okay. So how much Nifty can correct in the coming days? So we are not targeting any number so far, but as we've shared during the presentation, 24,150. That's the first area of support. That is the 20 days of exponential moving average. If it breaks, then 23,700 or maybe lower or something. So it's not that I personally feel that trend following works well for a trader, and this is what something that one should uh, you know follow, considering that if we start anticipating on every decline correction of 10%, 15%, and so we might end up losing the opportunity, maybe in last 4 5 months, 3 or 4 times, because every time we see like 2 3% kind of a cut, and eventually 50 resumes the uptrend. So as of now, we are maintaining this 20 EMA for quite some time on a closing basis, except a couple of occasions wherein we have penetrated badly. But largely, we are holding that area. So 24 150, if we break and sustain below the same, then this profit taking may extend. So keep on trading your stop losses on decline. If you have any short positions, is something that we usually do in trend following. Cement sectors we have already discussed in detail. Okay. So which sector to prefer when we are seeing correction? So again, I would say stick with the IT, not for aggressive longs, but for accumulation of quality heavyweights. Uh, if the market corrects further and if we see some consolidation, then we have some of the names from the FMCG basket also. Especially the top names like ITC, HUL, Colpal, Britannia, Marico, Imami, all these names are looking upbeat. So if we see any correction, then we can consider some of the FMCG names also. Then we have some of these stocks from the pharma basket also. So largely you can say the defensive space looks comparatively better, and it's not a good sign for the market usually when we see the defensives looking better. It means that market may witness some correction or consolidation. So this is what we have signals from the sectors. So accordingly, one should adjust the position. And more importantly, mid cap, small cap, we uh, limit your position in that space. That is more important because hedging those positions during market downturns become difficult, and it deteriorates further with the earning announcement. Any negative surprise and stock can react sharply lower. So mid cap and small cap is something that one should refrain and stick with the defensives for a time being now. So yeah, with this we have answered all the queries, and next week is going to be a week post expiry. So it's going to be the rollover report that we're going to discuss in the next webinar. So till then, take care. Thank you everyone for joining in. We can call here.